Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Bitcoin is currently bouncing from this important support, while Ethereum could be about to invalidate this pattern, which I'll talk about later in the video, so make sure to watch to the end. First of all, just giving you a really quick update here on the 4-day Bitcoin chart, and right now the price of Bitcoin is still running into this important resistance, sitting close to 31,000. And once again, as I've said in recent videos here on the channel, we still need to see a weekly candle close above 31,000 in order to really confirm this breakout. But as of right now, even though we have not yet seen a confirmed breakout above this resistance, this cup and handle pattern is technically still formed and ready to potentially activate if we simply see a breakout above this resistance. And as for the trend here on the larger time frames, as of right now, we are still within a larger multi-month long bullish trend, as I've been saying since around the beginning of this year. But anyway, now taking a look at the daily Bitcoin chart, and once again, the price is still running into this important resistance, going up towards around 31,000. And we also still have this active bearish divergence currently playing out on the daily time frame, which basically means, at least in the shorter term, we should not really be expecting a lot of bullish momentum, and instead we're due to see a bit more of a short-term cool-off, helping to reset the RSI. And this can play out in the form of either choppy sideways price action or potentially a slight pullback in the shorter term. And now, usually these bearish divergences on the daily time frame last for around 1 to 2 weeks or so before they begin to fade away. But if you're looking at this previous example that we saw back during late March entering into early April, obviously this was an active bearish divergence back then, but it only lasted for close to 1 week or so, consisting mostly of choppy sideways price action. And then after around 1 week of this previous bearish divergence playing out in the shorter term, we ended up seeing another leg to the upside to continue that larger bullish trend. And so this is essentially what I'm expecting in the shorter term. Once again, basically a short-term pause from the larger trend before eventually a continuation of the larger bullish trend, considering the fact that we have not yet invalidated that larger trend. So as of right now, that bullish trend once again is still currently active, and as the saying goes, the trend is your friend. And now if you're taking a look at the daily Bitcoin MACD, obviously this is still currently looking slightly more bearish than bullish as of right now. But with that being said, it is still showing a relatively low momentum in the shorter term, meaning we shouldn't really be expecting a massive crash or dump anytime soon in the short term. And instead, if we do see some bearish price action, it's likely going to be fairly mild, as in a slight pullback in the short term, if not some more choppy sideways price action. And now, if this short-term cool-off continues potentially over the next few days, possibly even over the next 1 week or so, which can help to reset the RSI even further, then in that case, we could eventually see a breakout back above 31,000. And in that case, next I'll be targeting around 37,000 based on these important Fibonacci extensions. And as I explained in my last video on the channel, another reason as to why 37K would be an important price target next for the price of Bitcoin is due to the fact that that is also the same technical price target for this potential bullish flag pattern. Because obviously, as you can see right here, the price of Bitcoin is essentially in a parallel channel, chopping around sideways in the shorter term after that massive bullish movement, which is a textbook bullish flag pattern. And if you're taking a look at the technical price target for this bullish flag pattern, that is sitting very close to $37,000, almost exactly where this Fibonacci extension is sitting at. But it is important to mention that as of right now, that technical price target at around 37,000 is not yet active. And so in order to activate that technical price target, we would need to see first a confirmed breakout above around 31,000. And once again, as of right now, we have not yet seen a proper confirmed breakout above that resistance, which means as of right now, this price target to the upside is not currently active. It is not in play. It's just that is where I'll be targeting next if we first see a confirmed breakout breakout above 31,000. And as for short-term support, we still have this range of support sitting in between around 29.9k to 30.1k, which is where the price of Bitcoin is currently bouncing from at the time of recording this video. And now, if we do actually see a confirmed break below around 29.9k with confirmation, for example, candle closes below that level, then in that case, obviously that would be a short-term bearish signal, and that would actually invalidate the formation phase for this bullish flag pattern. So essentially, if that happens, if we see that confirmed break back below this short-term support, then in that case, I would expect more of a short-term bearish trend to begin. And what that could look like is something like what we saw back here. Obviously, this was a short-term bearish trend, but it is important to understand the difference between the short-term and the longer term. So even if that happens, it's important to understand that that does not necessarily cancel the larger bullish trend. And as for those other levels of resistance in the shorter term, we still have this area of resistance sitting in between around 30.8k to 31k, and we have this level of resistance sitting at approximately 31.3k here in the shorter term. And obviously, as of right now, while the price of Bitcoin is still trading in between this support and these areas of resistance, we're still basically in a choppy sideways price range, which means as of right now, in the shorter term, I'm not currently leaning overly bullish or overly bearish. I'm simply quite neutral, at least in the short term. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And right now, as I've recorded this video, the price of ETH is still continuing this short-term bounce from this important support sitting in between around 1770 to 1820. And as for that larger multi-month long trend, obviously this is technically still bullish because we're still seeing significant higher lows and higher highs here in the price of ETH. But obviously just in the shorter term, we're simply taking a pause from that larger bullish trend. And if you're looking at the daily Ethereum price oscillators, as of right now, the daily Ethereum RSI is looking relatively neutral as it is basically chopping around sideways around the middle of the RSI. And as for the daily Ethereum MACD, this recently crossed in the bearish direction. But with that being said, like I said for Bitcoin earlier in the video, this is still showing relatively low momentum, which basically means I would not be surprised if we actually see either some choppy sideways price action or potentially a continued slight pullback in the short term, but I wouldn't necessarily expect a massive crash or dump in the imminent shorter term. And now staying on the daily time frame, looking at these Fibonacci levels of support, we have the 23.6% Fibonacci level sitting at around 1820 approximately, acting as important support, and below that level we have the 38.2% Fibonacci level of support sitting at around 1640 approximately, exactly where this previous low came into play. And now if you're looking at the 12-hour ETH to US dollar chart, technically speaking, this bearish divergence is still currently active, which basically means we should not be expecting a lot of bullish momentum in the imminent shorter term. And in order to invalidate this previous bearish divergence, we ideally need to see a breakout in the RSI above this descending line of resistance. And if we start to see the RSI trend back to the upside, forming higher lows and higher highs, obviously that would be more of a shorter term bullish signal. And as always, if the price action itself simply creates a new higher high above this previous high, that would also help to invalidate this previous bearish divergence. So as of right now, considering none of those signals have confirmed, technically this bearish divergence is still currently active. And now, as I've mentioned over the last 2 to 3 days, we have seen a small hidden bullish divergence in the 12-hour time frame because we do have higher lows in the price of ETH while also seeing lower lows in the 12-hour Ethereum RSI. But it is important to understand that a hidden divergence is usually not as strong as a regular divergence, which basically means it's possible we could see a slight bullish recovery in the shorter term, but not really a lot of bullish momentum. But overall, this bearish divergence is still likely going to remain active despite this hidden bullish divergence currently playing out. And now, if you're zooming into the 6-hour ETH to US dollar chart, it's possible that the price of ETH could be about to invalidate the formation phase for this head head and shoulders pattern, because obviously, as I've mentioned in recent videos here on the channel, the price of ETH is technically forming a head and shoulders pattern. We've already seen the left shoulder and the head, but in order to form the right shoulder, we need to see a slight bullish recovery in the short term for the price of ETH, potentially up towards around 1.9k to around 1950, really anywhere in that sort of price range, and then come back down towards around 1820, and then we would need to see a confirmed break back below 1820 in order to actually confirm this head and shoulders pattern. But if we continue to see more of this sideways price action in the shorter term for the price of ETH, and we do not see any bullish recovery at all, then obviously we don't really have a right shoulder, and that would help to invalidate the formation phase for this pattern. So first of all, it is important to understand that either way, this pattern is not currently confirmed anyway, because we would first need to see the right shoulder form and then break below the neckline. But if we never actually see the right shoulder form, then even if we break below that neckline, we simply do not have a head and shoulders pattern. So this is why the price of ETH could be about to invalidate the formation phase for this pattern if we see too much more choppy sideways price action in the shorter term. But either way, whether we see more choppy sideways price action, bullish price action, or bearish price action, you can still make a lot of money in crypto either way by watching these videos popping up right here on your screen. The video in the top left shows you how to make money no matter what direction the price goes using artificial intelligence, and the video in the bottom left shows you how to make money very easily in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.